updates. We're also going to bring you a conversation with the management at Lupin. They've delivered a robust set of numbers this time around, despite a challenging Q4. So is this growth sustainable? We put that question to Nilesh and Vinita, as well as the CFO at Lupin. Pankaj, in fact, holding that conversation with them. Listen in.
So far we have attained 8% share, and we intend to ramp it up over the next few quarters through fiscal year 22 to end up hopefully at the 20% share level. We haven't really seen a material shift with Sandoz switching, the product. There hasn't been a real material shift in the marketplace.
When we just talk about expectations of approval for inhalation going ahead for Fostair, when do you expect the approval come in? Looking at the COVID situation, the sort of delay, what would be your guidance for that approval? And any other competitors, do they have that drug as well?
We're not aware of anyone who's close on Fostair, and based on our progress with the regulatory authorities in the UK, we feel that we should be able to get the approval soon. So it's a material product for us, for Europe.
Right. Let's talk about cost rationalization for Solosec. Is that complete? Are you expecting Solosec now to turn EBITDA neutral going ahead?
So we decided to restructure the commercial spend on Solosec in light of the COVID situation and the impact in the OBGYN offices. We believe we are well positioned now to leverage the new indication that we're waiting for, the trick indication that we expect in the next couple of months to be able to drive share up. Still, the market is still impacted by COVID, especially, the OBGYN market, but we expect things to improve in the next couple of quarters. So I wouldn't say it's EBITDA neutral as of yet, but much better position now to get to EBITDA neutral in the next couple of years, given the reduced spend this past fiscal year.
Right. Nilesh, let's talk about, India growth business. A 6% number is a great number on a YoY basis. Any benefit coming in from Feripravar or any other COVID?
Yeah. So, as we shared yesterday as well, I think Lupin was late to address the COVID opportunities in the first wave. We did launch Favipiravir. Our positioning there was to bring in a low-cost alternative, a low-cost, high-quality alternative to people, and I think that is the lens that we have for the COVID drugs. This time around, of course, we've seen that it's obviously much worse across the country, and very clearly we want to be in the first wave with the offerings that we have. So there was minor sales of Favipiravir. Obviously, people like Glenmark did a great job of bringing the drug out in time, and they have leading market share. We do offer it, wherever there have been shortages, we've been able to address that as well, but it's small. A lot more impact is coming really in Q1, right? So as we're really seeing a pickup in April for some of the COVID products, but also for just the anti-infectives, because there's just so much more hospitalization this time around. But basis the guidelines, now we see pickup in products like budesonide, in low molecular weight heparin, in products like N-acetylcysteine. So we do see significant pickup now, April onwards.
Right. So, one is that. Secondly, how strongly do you expect India to bounce back in the coming year? Or is the recovery going to be delayed by the so-called mini lockdowns, which are being imposed by various states?
Yeah. So the lockdowns this time are, first of all, we've seen this movie before, right? So I think they're a lot more sensible in the way that they're being done, and people get it too, right? Obviously, there is a lot more concern at this point of time with how virulent the disease has been. We had 2 months of disruption last year, and then slowly things started picking up. Doctors in clinics went up to over 90%, patients went up to about 70, 80%, and we see 10 percentage points drop at this point of time. We don't see it down to 30, 40% as we saw in April of last year. So we do believe that this will bounce back. I do hope that we've seen the peak already and we're now seeing plateau and decline. But I don't think we're out of the woods yet. I think it's going to be a couple of months more for India, and hopefully a lot less pain thereafter. And with that will come a very strong bounce back. We're planning for a double-digit growth in India, and where we are at this point, we see that as imminently doable.
Right. Ramesh, let me come to you on the cost side. I mean, in the last 3-4 quarters, some significant great work has been done on the cost side in terms of savings, in terms of what you could imagine in terms of margins could be. Firstly, will that continue? And secondly, on the staff cost, do you expect it to pick up?
Yeah. So we have been working on, in fact, every line, in terms of the cost structure for the past now couple of years. And the fruits that you see are really an outcome of all of those. So on the gross margins front, we have been working on procurement costs, routes to synthesis, and nearly everything that goes into cost of conversion. We've been working on staff costs, and you actually made a mention of that as well. So there has been, working on productivity of the sales force, reduction of sales and promotion expenses, reduction of SG&A expense in various parts, working on operating leverage across markets, and of course on R&D productivity also. So we have been continuously focusing on that, and as a result, you would see the gross margins have been growing. So have been, in fact, the EBITDA margins, from Q4 last year to Q1, Q2, Q3, Q4. So it's a continuous improvement exercise. And I think the focus will certainly continue in the quarters to come. In the past, if you would recall, our base used to be 24, 25, and so on. And as and when there is a new product being brought into the market, there would be a spike. So we would like to bring the base back to about 22%, in line with, in fact, the rest of the peers. So and of course, with the introduction of newer products across various markets, that would be another tailwind attached to it.
Asked, will Q4 R&D cost be the new base? Can Lupin undertake a complex generic R&D, including biosimilar, inhalation, injectable, with 9% of its sales as R&D costs?
Well, our sales also, expected to increase in fiscal year 22 as well as years to come. So we believe we have the ability to support a higher level of R&D, but as a percentage of sales, it should remain at 9% and below.
Right. Nilesh, I also wanted to talk to you about the US FDA issues with plants. So, of course, you have been doing measurements, you've been trying to go ahead and, improve costing and better audits over there. But what is the sense you get from US FDA? Are they scheduling any desktop audits? Do you expect any physical, facility audits to happen, at least in this calendar year?
So we saw a few of the physical audits, right? At this point of time, it's very hard to envisage a physical FDA audit happening. Certainly not with anybody other than the India FDA office. But we're quite heartened by the FDA coming out with the remote interactive evaluation guidance. For the first year, the FDA did not come up with an approach, although a lot of the other regulatory bodies did come up with an approach, and I think we've had 8 remote interactions or inspections from multiple authorities around the world. With this guidance coming out, and it's just been a few weeks, obviously, I think it shows the FDA's intent very clearly to be able to, start some of these inspections. We're looking forward to it. In the best of our understanding, there really aren't any scheduled so far for major Indian companies. Certainly, we don't have any scheduled at this point of time. We've shared with FDA that we're ready with Goa, Pithampur 2, and Tarapur. We feel very good about some of the work that we've done in prepping for these re-inspections. So I'm hoping that something starts soon, but right now we don't have a timeline yet.
Ramesh, just the last word on FY22 outlook. What will be your guidance? Every year you tell us about the US growth expectation, India, and the margins. So what's there for the next financial year?
So the increase in EBITDA margins would continue during the course of this year. Given the fact that we start with a low base in various markets, you'd certainly expect that to kind of normalize. So there would be good growth across various markets. And of course, given the fact that you're looking at newer introductions and the ramp up of albuterol in America, we expect that particular market also to do very well. So our guidance, of course, is that you would see tremendous growth over the next few quarters.
Vinita, just the last word on complex, on moving towards complex biosimilars. What sort of investments do you expect over there, and when do you expect first commercial launch? In the complex space, or probably in the biosimilar or the injectable space.
Yeah, so in the complex generic space plus biosimilars, we have a focus on inhalation, complex injectables, biosimilars, and complex women's health products, device products, and we've made progress across each of the platforms. The investment from a R&D perspective, we already talked about at the 9% level, and it's been front-loaded, in the last many years. Like the inhalation, we started roughly around 5 years ago, and it started to pay off this past year. So next couple of years, you will see inhalation will really drive growth with albuterol, Foster, Dulera, Brovana, Spiriva, all of the products that we are planning to launch over the next couple of years. You'll start seeing a return from there. Then in biosimilars, you have Etanercept already launched in Europe and Japan. It's still way off in the US. There's a submarine patent, but pegfilgrastim that we have filed for the US, we would expect to launch hopefully in the next 18 months, FDA approval permitting. FDA is, we'll have to see if the FDA will do a remote audit on that site. But we're getting ready to launch a biosimilars portfolio, starting with pegfilgrastim in the next 18 months. And then complex injectables have evolved very nicely, with our capabilities in depot injectables in Netherlands, our peptides out of India, iron products out of India. We have partnerships in place for liposomal products, all of them making really good progress, multiple products that have, one is a major product has entered the clinic. And, the injectables, so we filed our first peptide product, Generelix, just this past year. So we would expect injectables to start contributing fiscal year 23 onwards. And then the devices, women's health devices, are really going to be fiscal year 25 onwards. We've again made significant progress there, but yet to get into the clinic with those products.
Okay, that was the management at Lupin. We're going to take a very quick break. Back with more on the other side.